when we had booming commodity prices, when housing prices rising at the fastest rate in post-war history, when we had all commodities going up at rapid rates, Fed Chairman Powell and the Fed said, we don't see any inflation. We see no need to raise interest rates in 2022. Now, when all those very same commodities and asset prices are going down, he sees, stubborn inflation that requires the Fed to stay tight all the way through 2023.
Hello everyone, welcome back to Just Invest Today, and that was amazing. We have Jeremy Siegel ripping the Fed. He is killing them for what they're doing in the market. They are causing a recession/depression. They've been switching the definition of a recession and what's going on in the market. They don't know what the hell they are doing, and they're doing the opposite of what they're supposed to do. Do you agree? Do you disagree? Let's get into this video. Let's respond to what he's saying, and he's saying a lot, man. He's a Wharton professor. He wrote a book on stocks for the long run. So let's hear what he has to say about everything happening in the market, because we know right now the market is been getting killed. This is one of the worst years on record, 23% down, and I feel like we still have a long way to go, guys. Let's prepare ourselves, let's listen to what he has to say, and let's get at it. Subscribe to my channel right now. Let's get into this video.
Precarious place.
Yeah, certainly. Scott, I find it very amusing. A year ago at that September meeting, when we had booming commodity prices, when housing prices rising at the fastest rate in post-war history, when we had all commodities going up at rapid rates, Fed Chairman Powell and the Fed said, we don't see any inflation. We see no need to raise interest rates in 2022. Now,
do you remember when they actually said that? Janet Yellen came out and said, damn, this is all transitory. Jerome Powell came out and said, damn, this is all transitory. This is not really inflation because of what was going on when they shut everything down. Now it's coming all back to bite them. And this is what they're not realizing, is that they did all this damn quantitative easing, buying bonds, buying mortgage-backed securities, investing in stocks, doing all of that nonsense and just inflating stock prices, the economy. And now they have to go on the other opposite side because they lied to themselves. They really believed that everything was just transitory. This was nothing. Kathy Woods even came out and said the same damn thing. She didn't even believe in this was a real inflationary period. You see all these people probably congregated in some freaking room and said, nah, this is all fake news. Donald Trump, fake news. Now it's coming all to roast. And this is the problem, because now they have to revert their stance, which is killing the economy, killing stock prices, killing the bond market, commodity, energy prices. Everything has been going down. This is all happening because you have a Fed that just refused to believe what was happening in the real economy at that time when they did all of this easing.
Now, when all those very same commodities and asset prices are going down, he sees, stubborn inflation that requires the Fed to stay tight all the way through 2023.
And that's the problem. He's going to do more tightening, even though everything has been going down. Have you been seeing the housing market? The housing market has been getting crushed. Rents are up. Like, it's getting out of hand right now. So I really wonder how much longer can he last by just increasing the interest rates every damn freaking next meeting. Like, how is this going to play out?
Doing no sense to me whatsoever. Way too tight. We do not have to get anywhere near that level to stop inflation, because all the inflation is basically stopped.
Do you guys believe that? He's saying the inflation is basically stopped. I'm not sure if that goes back to the energy market, that goes back to rents, because rents are pretty much up because people have to, or landlords have to actually increase their rents because mortgage rates. I'm not sure if that has to do with food. I feel like all of those indicators are up, which have a huge proportion on inflation. but the housing market has been getting crushed. Oil prices haven't been getting kind of crushed. Commodity, yes, I agree. Probably commodities have been getting crushed too. So I feel like it's like a balance, like what's really happening in the real world. It's like, damn, some markets or some sections are getting increased prices, increased everything. And then the other sector has been going down. So it's just like, what is Jerome Powell really, really looking at when he's saying inflation is just getting out of hand?
It's basically stop. I mean, you had a headline just came across 3 minutes ago. Oil back to January levels. That's before Russia invaded Ukraine. You can see what's happening in commodities. We're going to get the Case-Shiller index next week. It's going to show no increase or a decrease.
Guys, he is mad. He's big mad. His stocks must be getting crushed like the rest of us.
Increase for the first time in years. And that's a lagged indicator. On the ground, commodity, all the prices are going down. The only thing that's not going down is wages. And by the way, wages are in catch-up mode. Don't.
When it comes to wages, you see everyone, man. You see everyone cutting costs, cutting jobs. That is kind of killing the economy as well. Low key, people are talking about it, but not enough, man. Every big company is cutting jobs. They don't want to pay people as much money. They're giving them less hours. Like, stuff is happening with these companies, man. It's getting killed, especially if you're in tech. You're probably feeling it 10 times harder.
Don't argue they're pushing inflation. They're lagging inflation. I mean, the workers are trying to get what a little bit back of what the inflation happens to be. I think the Fed is just way too tight. They're making exactly the same mistake on the other side that they made a year ago.
He big mad.
There are those who agree with you,
Damn.
who think that the Fed is oversteering.
Yeah,
But saying it doesn't do anything for the scenario that we're currently in. If they continue to do it, whether you think it's right or wrong, if they continue to do it, what does it mean for stocks?
Well, until he sees the light and says, you know what, I don't think we have to be so tight. That until that happens, you're going to still have pressure on stocks. I mean, and that's going to, that's probably one of the factors that can see the light. I mean, when you see how high real rates have gone, the dollar the highest in 20 or 30 years. By the way, next Tuesday we're going to get the monthly stock market.
So you're still going to see a lot of pressure on stocks, and you have to prepare for this. If you find undervalued companies right now, whatever company you're looking at, if it's Baba, if it's Meta, if it's Berkshire, I think those companies are undervalued. I'm not saying buy them, but man, I feel like it's a perfect time to just DCA into them, man. Just slowly pick at them. You don't have to blow your whole damn load into them right now, but come on, guys. If you find a company that's undervalued at a good price, buy into it. If you think the next 5-10 years for the company are going to still be solid, buy into it now, because you don't know if the price or the stock is going to shoot up next week, next month, next year. Maybe it's too late. Remember when everyone thought back in 2020 that the market was just going to continue declining and everything shot right back up? Who knows if that's going to happen again? Even though it's a rare chance it's going to happen in this market, you just never know. You can't predict these things. So I'm saying if the company is undervalued, if it's a good company, has a competitive advantage, just DCA, buy into it now. Don't wait and hold on and hope that it just declines more, because you don't know if that's going to happen. So buy stocks if they're undervalued.
Money supply data, which is going to show the greatest decline in 5 months that we've had in the post-war period. I mean, if you look at any of the monetary or financial indicators, he can't say, oh, we have to keep them on. I mean, in his press conference, he said, we have to get real rates in the positive territory. They're in positive territory for every maturity. For the first time, we're already there. I mean, I thought that was the most uninformative. And no one was asking him the hard question: how do we have 3.2 million new workers and GDP going down? What does that mean? What does the record decline in the money supply mean? I mean, what does the collapse in commodity prices mean? What is the lag construction of these housing indicators that are 40% of the core inflation? which are going to filter through inflation for the next 12 to 15 months. Is that what he's looking at? Why is he looking at that? That's not an accurate view of what housing inflation is. I mean, there were no hard questions.
Those are all amazing questions to ask. Man, if you really ask the Fed that, I guarantee you Jerome Powell would have no answer to those questions, man. The Fed does not really know what it's doing, even though they say they do. But in my opinion, guys, sometimes you gotta ignore all these indicators, all these facts. Just buy these undervalued companies at good prices. Wait 5-10 years down the road. If they're still competitive, if they're still providing a lot of value to customers still enjoy the products, they buy everything. The whole macro, the micro will outweigh that. So guys, even though these are good questions to ask, they're hard questions to ask, we might not even get the answer. Even if he asked Jerome Powell this, he might not even know the answer next year, next 2 years. But we're making bets for the next 5 to 10 years. So guys, what do you think about all these damn questions about inflation? Do you think Jerome Powell is doing the right thing by tightening rates like crazy? Do you think he's doing the bad thing like Jeremy Siegel is saying, is that it's too much? Inflation's already going down, so you can kind of ease it off. Guys, leave your comments down below, like this video, and subscribe to my channel. Peace.